Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the euro currency. As usual, we have prepared today a weekly report, fundamental report on the situation in the European Union and the United States. Well, since currently the summertime, we do not have a lot of outbreaks on the statistics, and in general we could say that the trends that we have discussed in depth a few months ago are currently just standing and developing, so showing the progress in the direction that we have suggested. So the first hit and hurt on the economies in the way of the high inflation, drop on the consumption, deteriorating of the wealth of the population, we already see. The next step is coming is depressing of the housing market, employment market, and so on. So this will be actually next stage of the crisis that we're going to. Speaking it simple, we could say that currently the assets market, the global financial market becomes thin. So global financial resources are not enough to support rising and uncontrolled consumption on the United States in particular, as the most big consumer of the goods in the world, and the amount of the consumption that stands with the United States, they are rising too fast, and they do not intend to contract it. At the same time, they have less and less resources to support the consumption on the current level. I mean, the Treasury doesn't issue the new debt since March. The big amount of the volume. Fed stop printing money in general, although they're trying to use some cash balance and reserves that they have to support the markets for November elections, but still this source is also limited. The budget deficit is already contracted for the 2 trillions in the United States, mostly due to the social sphere, social spending, medical spending contraction, and they also is housing mostly, so they do not have more reserves to contract the deficit. Finally, all other markets who were actually foreign investors who were the supplier of the capital to the United States. First of all, this is China, this is European Union, currently are struggling with a strong trading deficit. I mean, European Union, China is a different story. This relation with the United States is, not very good. So all this stuff tells that the global source to support the stability of the United States and the reserve currency is melting. Yes, they have pretty much time still, I think at least a year before this will be some really big changes will start, because United States has $400 billion on the United States Treasury account. They have 2.2 trillion of the banking reserves on the Fed accounts. So this should be enough to, stand on the surface and support the debt market, support maybe even the stock market if they would like to, for 9-12 months, I suppose. So that should be enough. But after that, the situation starts to deteriorating fast, because European investors who made big inflows United States shares in 2020-2022 years, they are not selling yet these assets, but as trading deficit is rising, soon they will start to do it. Not only European investors, but also the Middle East investors, and that could hurt significantly the balance of the United States economy. So major points we have put in the report. You could read it and you could understand the overall, I would say, the strategy of the situation. Meantime, in the shorter term, what is more interesting to us right now, of course, United States has more stability. It has more reserves compared to the European Union, because in the European Union, the economy is very fragmentating, where we see the leaders of the Germany and France that could stay stable more or less, while in other areas its situation might be much worse. And we have the complex problem in Europe, where the situation in the economy deteriorating. There's inflation, electricity, power prices that actually companies would like to put upon the final consumers. It means to the population, and that raising big risks of political instability, social problems, and so on. All this stuff with the lack of the reserves and big trading deficit in Europe makes the situation very fragile and unstable, which actually led United States to stay more balanced and actually in a preferable role. That makes us think that in the nearest 6-9 months, the major trend on European currency will not change. So we still keep on the table our 90 below parity target, and that might be achieved within the, I suppose, relatively soon, 3-6 months maybe, not more. That is a common background for a fundamental picture. I think that you could read it. It contains a lot of interesting stuff today. In the shorter term speaking, we're considering on the daily chart this local ABCD pattern. Actually, if you'll take a look at the weekly analysis, you also see that market keeps harmonic swings very accurately, and weekly pattern develops as in timing as a swing distance very accurately as well. And nearest weekly target stands around OP 97, and that's actually, by the way, the major monthly butterfly target 97.50, where we see that maybe some pullback could happen next time right from there. But for a daily chart, it is too extended. As you can see that on the daily chart, we have the COP as well, the same minor ABCD pattern, which is 99.60, retesting of the previous lows. And this COP agrees with the daily oversold. So theoretically, here might be some pause in the downward direction, maybe some sideways action or something of that sort. So this makes sense to consider as the nearest local target on the coming week. It's 99.60 area that we will be watching for. On the 4-hour time frame chart, since overall situation stands bearish, we just need to consider possible taking the position. Here, as you could see, as we said recently, everything has been broken, level has been broken, ABCD pattern has been erased, trends on all time frames stands bearish, and currently, since the downside action with this local ABCD pattern on the hourly chart already has started. So you can see market has passed through the COP that we discussed from Friday. It means that market stands already in extension to OP. Based on the technical situation, it is not logical to expect any deep pullback because major pullback has happened already here. It means that if in this area we will get any pullback, this will be very small. Maybe to this level, the nearest standing level 101, maybe even smaller, just on the most recent swing on this minor leg, because market not at oversold is standing lower. So from that standpoint, if we still get lucky and it will be some pullback to the 101 area or even retesting the B point, that might be not bad opportunity to consider taking the short position with a stop somewhere above the confluence or above the C point with a continuation to the OP 99.60. So that is nearest trade that we could consider. In the current environment, search for taking the long position, well, I do not see any good background for that. You probably do either. So that's only chance that if we will get the pullback here, that provide us more or less acceptable risk-reward ratio to the OP trading. That could be taken. If market will just keep going lower, in this case, it will be well, almost no chance to take the position because you will have to place stop somewhere too far and your risk-reward will be not attractive. In this case, it would be better to wait the reaching of the OP 99.60, then wait for the pullback and then consider taking another trade aiming on the major target round 97.50.